What's going on, crypto fam? Big Rob here from Sin City Crypto. Fed rate hike was just announced today, or actually the lack thereof. So after 10 consecutive hikes in a row, the Fed has finally paused the interest rate hike. And what does that mean for crypto? What does that mean for Bitcoin? Well, in the last about 45 minutes, we've had a big sell-off on Bitcoin. We went from 26,000 and dipped all the way down to 24,800, and it's rebounded right at 25,000. And so what caused the sell-off? If we had a pause, as we've said before, we were expecting a pause on the rate hikes, why did the markets react negatively? Well, after announcing the pause, Jerome Powell came out and said that they're predicting about 2 more rate hikes in the future, and he even went as far as saying that this meeting here, they were going to skip. Now, later on during his questioning, he did walk back the word skip. He said, I shouldn't have called it skip, was his exact words. But yeah, the markets kind of freaked out. We saw the Dow Jones and the S&P 500 sell off, and Bitcoin kind of held strong, didn't really have much movement at all. And then as of lately, we've had a little bit of a sell-off. So we've been hanging around this $25,000 to $26,000 range. Is this going to be the new area that we trade at? Is this going to be the new channel? Let me know what you guys think. Put that in the description, and we'll make sure we read all of those and reply to you as well. Now, so he said he's going to do 2 more rate hikes. Now, this is out of the norm of Jerome Powell. In the past, he's said that they're going to look at the data meeting by meeting, evaluate the CPI and core numbers, the PCE, and they didn't really fall into that mold. And some are saying that they were suppressing the perhaps markets to rally. They didn't, because the whole reason that they were raising the interest rate hikes was to suppress or quell demand, and they were trying to basically cause a small recession without crashing the economy to in turn lower inflation. And I think that they were going to pause this whole time, but they didn't want the markets to rally and lose any of the progress they've had in slowing the markets. So they kind of put a little bit of fear in there as well, saying, hey, we will be raising again. The CME is projecting that we're going to have another rate hike, and perhaps 2 as well, even before this meeting. So it shouldn't come to a surprise that we're predicting a interest rate hike, but it does come as a surprise that Jerome Powell just came out and straight said that. Now, let's not forget that the Treasury Department is getting ready to issue another $1 trillion in treasuries. This is after they came to the agreement to raise the debt ceiling. Now they need to bring in more liquidity into the U.S. markets, and they do that by selling T-bills. Now, that's not the only thing that's going to be slowing down our economy. You also have student loans. And so there is millions of American residents that are paying student loan bills, and now, or have not been paying bills for quite some time. They've been on the back burner and not required to pay. And now you are required to pay your student loans here in the I think it's next month. And so that's going to be money that is not in the markets, and they're going to go to paying down your bills. And it's a far cry difference from where we were a few months ago, where Biden had came out and said they were going to do the student loan forgiveness. That was one of the bargaining chips on the table for raising the debt ceiling, one that the Democrats and Joe Biden and the executive branch did not push back. Now, one other thing on macroeconomics, the housing demand is coming down while housing supply is going up. So people are building houses, but not quite buying them as fast. And so right now it is a renter's market. There is a lot of houses in the system with very low interest rates. And, well, you can pay your house note by just simply renting your house out. Now, we also have the obvious whale in the room. So with all of these So you have the housing, the student loan, the treasury bills. With all of this coming together, the Fed needs to be extremely cautious on moving forward with any interest rate hikes, or even how they address these questions in the media, in the press room. Because we are teetering on deeper recession and perhaps some economic uncertainty, and we have unemployment is starting to creep up. Will we get to that doomsday 4-5% that some people are saying that we're heading to, which is very indicative of a deep recession? Now, I am curious on where Bitcoin will be ending up, and for that, I would recommend coming and check out our live show tomorrow, where we're going to talk everything Bitcoin, prices, and altcoins as well. So if you haven't checked out our live show, we go Monday through Friday at 2 p.m. Pacific, 11 Eastern time, and we're going to give you a little bit more analysis on the Fed the Fed meeting. And so if you want a little bit more breakdown on that as well, come check us out tomorrow. And till then, have a great night. Peace.